Hi, I'm Ross from Lifetime Property Accounting, and we're just following on from our post about yesterday about interest limitation. What's the real tax effect of interest limitation? Yesterday, I did an example of a property making a loss, and then you end up paying maybe $5,000 of tax, even though you're losing money. So that was one example of interest limitation. This is another example that I'm going to go through today. This is an example if you're making a profit. So say that we've got an older property with a 10% gross yield. Um, Terrible spelling there. So yeah, if we've got a 10% gross yield property, generally it's a multi-dwelling. So let's say it's $900,000. We always work on borrowing 100% because most people, if you're putting in cash, you still want a return from that, and most people are actually borrowing 100%. We'll go 50 weeks to make it easy maths for me. $1,800. That's 90,000 of rent, 10% gross yield. So this is a made up example. I don't have exact property for you, but generally you're going to have higher insurances. There's going to be multiple dwellings, maybe borrowing 4.6% at 1 year at the moment. Property management, your rates are going to be higher, your repairs are going to be higher because you've got multiple properties. So just to start off with some numbers, yeah, $90,000 of income, 67,000 of expenses. We're making 23,000. We're then going to have some chattels within those two dwellings. Going to have some carpets, curtains, dishwasher, stove. So we'd get value it in. They'd do a chattels valuation, which would then give us a bigger cost, reduce our taxable income. So if we're at 33%, we'd be paying about 5,600 in tax. So if interest limitation comes in, we can't claim that 41,400 of interest. So rather than having a profit of 23,000, we'd have a profit of 64,000. Um, we then got the same chattels depreciation. Our taxable profit after depreciation goes from about 17,000 to 58,000. We've then got a tax bill instead of 5,000, we've got a tax bill of about $19,000. So we're making 22,000. We're paying 19,000 in tax. We're left with 3,678. So let's do the maths quickly on that since we've got Excel open. How much tax is that as a percentage? So, we talk about taxpayers. I've talked about 33% tax bracket. A company is taxed at 28%. What is this tax rate with interest limitation in there? And it is a whopping, absolutely huge tax rate. We're up to 83.96% tax. So yeah, this property investor is making $23,000 of cash. Yeah, there's some chattels appreciation, reducing their taxable profit. Then they're still paying, yeah, 19,000 tax on 83%. If we did it out of the actual taxable income, it's even going to be worse. So we'll do that out of the 17,000 instead, and we're up to yeah, 114,000, sorry, 114% income tax. So yeah, our tax rate when we're talking about 28, 33, 39% tax, this poor person of interest limitation coming in is really going to be making 23,000. Their carpet, their curtains, their dishwasher and things are going to be wearing out. They're going to have to replace them at some point. So yeah, they're making a real profit of about 17,000, paying a tax bill of about 19,000. So they're actually paying 114% tax. So yeah, if you're looking at different things happening, looking at interest limitation, this is what could happen if you've got a profitable property. You could be moving from making some cash going into your pocket, into very small cash going into your pocket. And then, yeah, if we're working, allowing for assets to wear out and having to replace them, effectively your tax bill is more than you're making. So you're paying 114% in tax. Yeah, hopefully you found that useful. Yeah, hopefully that's something for you to consider. Thanks a lot. Bye.